Imagine two friends. One spends every evening watching stock market videos, reading headlines, checking charts, and trying to figure out which company will become the next big winner. The other spends just 10 minutes every month investing in a simple index fund. No predictions, no constant monitoring, no emotional decisions. 10 years later, who do you think has more money? Most people instinctively choose the first person because effort feels like it should produce better results. But investing doesn't reward effort the same way school or work does. In fact, the harder many beginners try to beat the market, the more likely they are to fall behind it. That's why millions of new investors are quietly changing their approach. Instead of asking, which stock should I buy? They're asking a completely different question. How can I own the entire market instead? That single shift in thinking has changed how beginners build wealth. And once you understand why, you'll never look at investing the same way again. The investing myth almost everyone believes. When most people first become interested in investing, they imagine success as finding the perfect stock. Maybe it's the next technology giant. Maybe it's a company nobody has discovered yet. Maybe it's the business that doubles or triples in value. Movies, social media, and financial news all reinforce this idea. The heroes are always the people who picked one incredible company before everyone else. Nobody makes documentaries about someone who quietly invested in an index fund every month for 30 years. But here's the interesting part. The exciting story is rarely the common story. The investors who become wealthy over decades usually aren't making dramatic predictions. They're following systems. Systems remove emotion. Systems reduce mistakes. Systems allow consistency to outperform excitement. That's why experienced investors often sound surprisingly boring, because boring strategies tend to survive. Exciting strategies often don't. Why picking stocks feels so attractive. Our brains love certainty. We love believing we found something everyone else missed. Buying a single company creates a feeling of control. It feels intelligent. It feels personal. You start following the company. You read every headline. You celebrate every price increase. You worry about every decline. Slowly, your financial future becomes tied to decisions made by one company's management team. One disappointing earnings report, one product failure, one lawsuit, one unexpected event. Suddenly, years of gains can disappear. Most beginners don't realize they're concentrating risk rather than building wealth. Owning one business means your future depends on one business. That's a much bigger gamble than most people think. What an index fund actually is now. Imagine something completely different. Instead of trying to guess which company will win, you simply own hundreds or even thousands of companies at the same time. Technology companies, healthcare companies, banks, manufacturers, retail businesses, energy firms, consumer